It was a choppy ride for the markets last week, with the Indian indices reacting sharply to geopolitical events. Commodity markets too were not spared. Prices of key commodities, especially crude oil, went up steeply. With the Russian military intensifying assault on Ukrainian cities, the Brent crude oil shot $221 per barrel on March 3rd, before easing off $210 per barrel on talks to revive the nuclear deal with Iran. Wheat prices also spiked over 58%, and corn prices climbed over 20% this month. It's also going to be an action-packed week where geopolitical developments will continue to impact how global financial markets perform. Back home, all eyes will be on the outcome of assembly election results of the 5 key states: Uttar Pradesh, Punjab, Uttarakhand, Mizoram, and Goa, scheduled to be announced on March 10th. Given the sharp surge in Brent crude oil prices, most analysts expect the government to hike petrol and diesel prices this week. Let's tune into Gaurang Shah of Geojit Financial and how he sees the markets play out.
The government is talking about increasing fuel prices. So after looking at that, what is the quantum of increase in fuel prices? I think the markets would give you an opportunity of one more dip. At that time, I think maybe 25-30% of whatever capital you want to invest should be allocated to buying, like I mentioned, starting with IT, then going into financials like banking and finance. Possibly some of a little bit of metals have become attractive. They have started showing some kind of a positive sign. So I think primarily these 3 or 4 sectors should be looked at buying into large cap stocks. Depending upon the outcome of the result, if the outcome is favorable, then possibly you will see some kind of a relief rally. But again, if the state elections will have to disappoint, then that would add to a little bit of more downside.
By the end of the week, India will also be releasing the industrial production and manufacturing output data. At the global level, the US Federal Reserve will kickstart this week by releasing consumer credit data for January 2022 today. Investors will keenly track whether consumer spending has boomed or bottomed out after the third wave stoked the US inflation to a 40-month high. The European Central Bank is slated to roll out their decision over rates and asset purchases on March 10th. Also, the US will release Consumer Price Index data for February 2022 on March 10th. So how should you approach the markets then? Here are key levels you need to keep a tab on. Tech charts suggest a negative setup for Nifty 50 with the index slipping below 16,000 levels, with 16,150 acting as a support for the benchmark index. Selling intensity is likely to increase as Sensex signals a downturn to 53,000 with a support of 53,850 and 53,550 levels.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.